not running that thing, are you? Here we are at St. Anne's Catholic Church of the Deuce. This is where our ancestors came from Switzerland and came over and yearned someday to become beauticians. They've succeeded in their goal. Let's go over here to wait upon. Hey, what do you think?
Bicep, oh my god. Brachioradialis, long head,
yes,
not even there. Triceps, then who knows how many you got in there, probably 3, 4.
A lot of muscles.
Soleus, that's in
It's like now he walks around here and he looks at every headstone and he thinks $3,000. And he walks over next to him and thinks $7,000.
I know, it's a weird business.
Oh
Did I get
Hi, Phil. Yeah. Okay. I'll start with this. I'm going to start this way. This is Jimmy, the youngest one. Hi, Jimmy. Jeanette. Hi. And Jeff. Oh, Jeff.
He's on the camera.
Tommy, Jeanette.
Okay.
And this is my son-in-law, Mark Caprio.
Hi.
And this is my son, Danny. This is Elaine.
Hi. Nice to
Our
meet
only
you.
daughter, Polly.
Oh, no, I didn't realize that.
And this is her husband, Mark Caprio. And this is Jay.
Twice. You
And little Holly, my little friend.
Right. Now, who are you?
I'm Elaine Jeanette.
But
We lived on a farm just over here.
oh, you skated to school. The Matthew side or the Happy
The
side?
Memphies were on this side.
Have you seen the...
You skated
where the
to
college
school.
skated.
Yeah, sure. No, I don't know. This is Jay's really good.
This is Roger. Let me tell you, Roger. Guess out of all the kids when we went over to Minneapolis, Roger sat on Elaine's lap, and Roger just loved Elaine. Would you like to sit on my lap now? I have to tell that little story. Oh, well, I don't either. But this is, and he sat and we were at 6 in Minneapolis. Oh, Adam.
my God.
There's a school later on. Adeline Stearns.
Is this all of her family?
This is Adeline Stearns. I went to school with her, Jimmy, and this is my son-in-law, Mark, there. Oh, and I have a son over there, Jeff. Jeff. This is Adeline.
That's the school next.
And this is Danny. Danny right there. And this is Polly, our only daughter. And James, our oldest son, and Holly, my little grandbaby. Ron. And Roger.
Do you all live in Chicago?
Yeah, we all live in the same house.
But
You all live in the same house.
yeah, practically, yeah. Yeah.
They're so great.
And Elaine lives in Minneapolis. Yeah. Adeline still lives in Minneapolis.
10 cents a shine. But in Iraq, at least, the would-be empire maker has been defeated, and peace rules. And on the carrier Abraham Lincoln, they're still talking about yesterday's presidential landing from a Lone Star sky. Those looking for investment opportunities in the emerging Asian markets are counting on Indian Express and Eye of the Tiger. Meanwhile, back at home, Congress continues to have a lot of neighing about taxes in its domestic dispute, while the presence in the Derby lineup of 10 most wanted may be a hot tip that the SEC isn't finished yet. And finally, my friends, at an early line 50-1, I'm out of here. Later in this program, we'll turn our attention from jockeys to another group of legendary little people, the elves, which is the name I gave many years ago to the market's technical analysts, the wizards who take a wiggle on a chart or a squiggle on a graph and purport to tell you where General Motors will close 2 weeks from next Tuesday. Sometimes they're even right. And my guest tonight will be 3 of Wall Street's best technical analysts. The 3 best, in fact, if you believe the latest institutional investor poll. But first, let's see how the market was horsing around in the week just passed. And as the Dow Jones Industrial Average indicates, the more cheerful mood for stocks continued for a 3rd straight week, as even downbeat economic reports, including a rise in unemployment, were interpreted as yesterday's news, with tomorrow now looking better for employment, profits, and business spending, with the Dow joining the party all the major indexes are ahead for the year, and at their highest levels in months, led by the long-suffering NASDAQ, which hasn't been at this number since last June, and has now rebounded a whopping 35% from its October low. The suspicion that renewed economic growth may bring with it a whiff of inflation hurt bonds and the dollar, but helped gold climb back above $340 an ounce, though the world oil price continued to recede. And as if we didn't have enough to worry about, a group of British scientists announced this week that after years of study, they now have proof that fish feel pain. Animal activists immediately declared that fishing was cruel and should be stopped. But groups of anglers shot back that it was all still, as they put it, supposition, that they had several bones to pick with the study, and that to them the whole thing wasn't even finny. Well, let's see if we can hook some good advice for you tonight. Louise Yamada, who has been the #1 ranked technical analyst in the Institutional Investor poll for the past 2 years, has spent all her 23 years in the investment business with Smith Barney. Jeffrey DeGraff, who has been following his elfish pursuits at Lehman Brothers since 1998, has been close on Louise's heels in each of the past 2 annual institutional investor ballots. And Dick McCabe of Merrill Lynch moved into 3rd place after correctly forecasting the market's continued weakness in 2002. Let me begin by asking each of you, where do you see stocks heading over the next year? Louise?
Well, we're certainly more encouraged that we have a positive direction coming ahead of us here, so that we think it should inch higher.
Is that because the stocks did some breaking out today?
Stocks did some breaking out over the past several weeks.
Breaking out is hard to do. Jeff?
Well, I think if you look at the track record of 4th years after 3 consecutive down years, the 4th year tends to be positive, but a lot of people don't look at the actual results, and unfortunately that 4th year the average return's only about 5%. So I think there's a good chance the averages end up this year, but I think there'll be some hairpin turns and some sharp objects in between here and there.
So not a bell-ringing year.
I'm afraid not.
Dick?
I'd be a bit more optimistic. I think stocks have been bottoming since last July after a vicious 2 to 2.5 year bear market. I think things are very oversold, skepticism prevails, and I think the stock market's going up this year. My guesstimate is that the major averages here in 2003 could score a gain of between 15 and 20% and still make a little more progress in 2004.
Why am I not surprised that the 3 best technical analysts in the business don't agree? In any event, we asked each of these folks to give us one favorite indicator that ordinary investors could watch. Louise saw value in following NASDAQ's momentum. As you'll see, this monthly chart is mostly downhill, while the more recent weekly momentum has been looking healthier. Louise, does it add up to a buy or a sell in your judgment?
It adds up to a buy, and there's a nice positive divergence there where the price went to a new low and the momentum did not. So that has been a healthy development, which is in place actually for all of the indices.
Explain the difference between price and momentum.
But the price is the actual price of the index, the NASDAQ, as it fell to 1114, and the momentum study is exponential moving averages that one crosses over or under the other to give a signal.
Looking better now.
Looking much better.
Jeff chose his so-called master sentiment indicator. When it's high, it suggests too much pessimism, but it's just dipped into what Jeff regards as overly optimistic. How much does that worry you, Jeff?
Well, I don't think it's a big problem now. Trend and momentum are our primary gauges, but sentiment, when everybody is looking and discounting those trends and that momentum, that's when it becomes an issue. So I think we're getting into a point that it's going to become an issue probably in the next 50 points or so in the S&P.
So you think we could have a little more, but not much more at this point?
Yeah, momentum's positive at this point, but I'm afraid that people are becoming too optimistic from our master sentiment indicator reading.
Dick gave us 2, the S&P 500's annual rate of change, which he interprets as showing that the market has been oversold for a year or 2, and another contrary indicator, the ratio of pessimistic puts to optimistic calls, which has lately been high enough for Dick to give it a more upbeat interpretation. Dick, how good is this news?
I think it's pretty good. I think the market is beginning now to recover, as the chart shows, from that deeply oversold position. So I think it's going to be the springboard for this advance I've talked about in 2003 and 2004. Sentiment has been very cautious. People have been very skeptical, I think, about the rally, even turning the news to say, well, yes, corporate profits were good in the first quarter, better than expected, but there's the side of it that revenues have not improved. So there's always the what if or what about bad side. So I think it's a very healthy condition.
Louise, are you a pure technician, if that's not an oxymoron?
I would certainly say yes, we're a pure technician in our shop. We have no windows in the chart room. We don't want to know what's going on outside. The patterns of the charts, however, do let us to make some conjectures about what might be going on outside. But I think that technical is a tool, one tool in the investor's toolbox.
Explain what you mean by that.
Well, I think that if you have fundamental, looking positive, the technicals, which is the timing or the supply-demand forces looking positive, that you have a much better chance at success.
Jeff, how about you? Do you care what a company does?
I actually don't. I've got a fundamental background, but I found the wisdom in the charts. And to the extent that the charts give us some information on what's happening in the broader economy or the markets, we'll use some of our fundamental background just to put the pieces together. But we're always interested in what the charts are saying.
Dick, do you look outside the window?
A little bit. I certainly subscribe to the idea you should use both disciplines in arriving at a final decision, but I like to focus on my discipline to avoid double counting in the overall process. I think it's very important, though, to see how the market or a stock's price responds to a particular piece of fundamental news. So, for example, if good news comes out and the stock does not go up, it may say the stock is overbought and going to go down, vice versa on the downside. I think it's like medicine and surgery. You use both to certain degrees in forming a final investment decision.
Does that apply to the overall market? For example, a few weeks ago, it seemed to me there was a downbeat interpretation to every bit of news. Today we had some employment news that could have been thought of as downbeat, but the market went up. What's all that about?
That's it. I think that's a good sign. It seems like the market in the last 4 to 5 months, as opposed to a year or two ago, is ignoring or shaking off the bad news, yet responding to some good news like the military victory in Iraq. But in recent days, we've had examples where people have tried to somehow twist what has seemingly been good news to bad news, and that psychological aspect of it, to me, is a pretty good sign.
So even pessimism exhausts itself after a while.
I think eventually, if we get too much optimism and belief in the good news and it's played into the market, then the situation may change temporarily, but I don't see that happening yet.
Well, Louise, Dick raises an interesting point. It seems to me that you technicians are contemptuous not just of the crowd, but of most other technicians. You want people not to agree with you. If too many people agree with you, you think it's going to go the other way. Is that right?
Well, that's the old contrary indicator. But I think certainly technicians probably have a little bit more in common in the direction that they're looking, but two people can look at the same chart and come up with a different answer. It's an art as much as it is a science.
It's either a triple top or a spike bottom. Louise, tell us, given your tools and given your more upbeat mood, which you just told us about, because you really were correctly gloomy for a long time, what would you be buying now?
We have a few names that I can share. We have to, in interest of disclosure, say that Citigroup owns 1% or more of any of the common shares, classes of common shares in Mylan Labs and in Danaher, but not in Lexmark. And those are the three. I think you're looking for something more cyclical. Danaher is a very attractive name.
Let's take them one at a time.
Yes.
Which one do you want? You started with Mylan. Do you want to start with Mylan?
Okay, sure. It's just broken out recently out of a very interesting 4 to 5 year consolidation, and I think it fits in with the small and mid-cap stocks, many of which are coming out of extended consolidations and look as though they may be able